Well, welcome everybody. Thank you so much for joining us today. I'm very excited to be able to share this time with you to talk about real estate in an IRA. We're going to give it about 1 or 2 more minutes for the rest of the attendees to come in, and then we'll get started. In the meantime, I just want to point your attention. We do have a chat feature in this webinar. That's what you can use in order to send us your questions. Matt and I, we will be answering questions live today. We do have a presentation for you, something that we want to share with you in today's live podcast, but we will be taking your questions to make sure that we answer what you want to know. With that being said, thank you so much for joining us. We're looking forward to getting started here. All right, we're going to get started here today. As I said, my name is Stephen Plocky. Thank you guys so much for joining Midland Trust's live podcast talking about buying real estate in an IRA. I personally have been with Midland for about 4 years now, and I personally have been able to help hundreds of real estate investors begin their IRA investing into real estate. I'm a senior business development associate here. Matt and I have worked together for some time, and I'm excited to speak with Matt today about this really important investment strategy and very exciting investment strategy. So, Matt, how about you tell us a little bit about yourself?
Thanks, Stephen. Yeah, as you said, Matt Calhoun. I'm a sales director here at Midland. I've been with Midland for a little over 5 years. Beginning of that time was spent where most of us start, which is a lot of the service department, because it's a great place to kind of learn, like you said, walk hundreds of people through the process of opening an account, buying a real estate property, and then what service it would need throughout the lifetime of that investment. The last few years I've spent on the business development side, which is really those first phone calls that all the clients make to find out, what are we going to do with this account? I have this idea. I want to buy real estate with my IRA account. How is it done? Where are the funds coming from? How to keep that application done to get the process started. So very good chance a lot of our clients have talked to myself or our team to figure out how that process works. Outside of Midland, I'm actually a real estate investor myself. So I've been on both sides of the equation, the person buying, and then I've also been on the side of what we do in Midland and serve our clients. So I'm passionate about real estate. Like I said, it's shaped my experience from Midland, getting a lot of exposure to transactions, and then also being the one buying. You get a good idea of what buying real estate looks like.
Thanks so much, Matt. I'm going to put our contact information up here right now. So if you guys are interested in talking to Matt and I, whether offline or onto the webinar, that's up to you. But we want to put this out here. I'll put this up at the end of the presentation as well, so that you guys have the ability to ask any questions that you may have. But with that being said, we're going to go ahead and get started. I'm really excited to talk about today's topic, which is real estate in the IRA. I know that those of you who are listening are interested as well. But Matt, as a real estate investor yourself, I just want to know what your industry view is. You've worked in this industry to, as you said, literally help hundreds of real estate investors get started with investing in an IRA. So I wanted to get started today with your insider's look. What are the really sharp investors who use Midland doing with their retirement accounts in real estate?
Yeah, no, I get that. I think about myself, but also people ask, hey, what are the smart people doing? What are the sharpest people that you talk to doing? I'm always kind of reminded of there was an interview Warren Buffett did quite a few years ago at this time. I think it was around the tech bubble. And they asked, aren't you mad you missed out on some of these tech stocks? And he says he never invests in businesses that he cannot understand. That was a while ago, but I always think our sharpest investors are doing the same thing. In that sense, they're investing in businesses they do understand, in asset classes that they like, that they understand, as far as they may not know how a certain mutual fund works or what that manager is doing, but they know what their local real estate market's doing. They know, a property they like. They know how they can change things, the renovations, and how that raises the value of their real estate. So to answer your question, I think what the smartest people are doing and why they come to Midland is they want to invest in something they understand, something they know, they're passionate about, that it can grow their retirement account at the same time.
Yeah, that's really good, Matt. So let's just jump right in. You're talking about people investing in what they know and using real estate as an asset class they can leverage in an IRA. The biggest question that you and I both receive all the time is why some of our investors have never heard of this before. Can you talk to that a little bit, Matt, about why this seems to be a big secret?
Yeah, it's some version that's always, how long am I going to do this? I've never heard of this before. Or why didn't you tell me about this 20 years ago? And the truth is, you've been able to do this for over 40 years now. IRAs have been able to hold real estate as an investment. You don't have to hold stocks, bonds, mutual funds, is what most people think. Many types of real estate investment have been able to be held in a retirement account since IRAs existed. It just sometimes it's not well known. You need a company specifically like Midland that can administer these types of investments. So, to answer always those questions, whether it's people are mad they didn't do it a long time ago, or they're just kind of figuring out what that looks like. The truth is, they've been able to do it for the longest time. They can take advantage of holding an asset class they really like in an IRA.
That's awesome. Yeah, true diversification is possible at Midland Trust because we can hold real estate in an IRA for our clients here. That's so good. Thank you, Matt. So let's talk about why someone would want to use IRA money specifically to purchase real estate. What makes the IRA itself so attractive to real estate investors?
Yeah, I'll start with just IRAs in general and then bring that into real estate as well. But tax deferral power in an IRA is huge. For those that don't know, an IRA is a tax sheltered vehicle. It's going to be deferred while that investment's held in that retirement account. So if I'm buying that real estate property, my tenant, for example, is paying income back into that retirement account. I'm not being taxed at that at the end of the year. Especially with property values in most areas going up over the last couple of years. If I sold and made a huge profit, I'm not getting a capital gains tax. That money goes back into my retirement account. And the biggest key is now I can invest all of those proceeds into the next property or my next investment versus maybe a chunk of it going, to the government as taxes and then only being able to reinvest a portion. I can use all of that to buy the next property and doing that snowball my retirement savings, much larger. The nice thing also is that retirement accounts give you the benefit of when you want to pull those funds out. If I sold the property, here's my money. I either have to reinvest it or I just got a lump sum of cash. With the IRA, you have flexibility on when you want to pull that out. So there's, real control over supplementing my retirement with that account versus having one of two options and one possibly having a large tax consequence versus, redeploying into another investment. Talking about real estate in general, I would assume a lot of people in this call probably really like real estate in general. They know it's a powerful tool to build wealth. It's tangible. People like the fact that they can see it. Somebody's going to live in it. It's providing value to a community, while also being a powerful tool for growing wealth through income generated, property values increasing. So a lot of different ways that real estate is powerful. And you're basically combining the two, the tax deferred power of an IRA with real estate and combining the two.
Yeah, it's an incredible combination. We've seen, like I said, hundreds, if not thousands together between you and me, Matt, of real estate investors be able to take advantage of those two really powerful features of both real estate and IRAs together. That's great. So we've now talked about the power of IRA investing with real estate and the benefits of doing so, but I'm wanting us to get a picture, Matt, if you could, of what this typical process looks like. We're talking about buying real estate in IRA. Most, if not all of the people who are here today have not done that. That's why they're here in this webinar. Can you walk us through what that process looks like, how Midland gets involved as an IRA custodian to help them in this process, and just give us a quick A to Z of how this gets accomplished.
Yeah, I mean, I'll give you the most common, or maybe I'll just say the most basic way this looks. And obviously, there's diversions and different things that can be complicated. We'll get into some of those, but most commonly, we're looking at a cash purchase. Very often between either the IRA account or maybe some tenants account purchase, but it's going to be a cash purchase. Leverage is not normally involved in the purchase. The IRA was set up here at Midland. We'll transfer funds in from an old IRA account, somewhere else, a old 401k account, 457 pension plans, old employer plans are transferred to Midland, and then we use those funds to close on the real estate. That's gonna be the most common, purchase that we see most often. Like I said, we'll get into some of the other options, but most commonly, that's what it looks like.
That's great, Matt. Yeah, and we have a little roadmap that I actually put up for us about the typical process that Midland as an IRA custodian helps our clients get through in order to get a property that's out there into your IRA. The first step, as we see here, we just open the IRA and we fund it with IRA contributions, rollovers, or transfers from another retirement account. Once the account has been funded, we're able to sign contracts in order to prepare for closing. So we're going to have our clients obtain a contract listing the IRA as the buyer. This is all a process that Midland helps with. So you're not having to go through this alone. We'll give you specific instructions and assistance on that contract and closing document process. And then the last step, which is probably the most exciting one, our clients then authorize Midland to send the funds from their IRA account out for closing. And that's the A to Z over the process here. Okay, moving on, Matt. So I know that's super helpful to know who we usually work with about the cash investor. They have all the funding there and available, but I know that that's not everyone that we see here. Not everyone's going to be, the picture of that type of investor. So what is an example perhaps of maybe sometimes the real estate investment process goes wrong? Like, what are some things that we see real estate investors really stubbing their toes on, really having a difficult time if they've never done it before, that we can maybe help circumvent by talking about it today? What are some of those common missteps?
Yeah, and a few come to mind, so I'll cover all those. The first one that comes to mind, and we try to catch this on the beginning side, is making sure that the idea that you're buying this property for is compatible with an IRA. That what you're looking to accomplish can be done. There are prohibited transactions, prohibited parties that we can touch on a little bit more. But really, the best way to think of it is the property purchase is going to be for investment purposes solely. Like the why we're doing this is to grow this retirement account. Is basically the main purpose of why we're purchasing. If there's other reasons, it can derail the idea of using this IRA account for this particular property. It's still a tool in your tool belt, something you can do, but maybe not for this particular deal. Second one that comes to mind, and this can really put investors in a hard spot, is not setting the IRA account quick enough or ahead of time. Sometimes this works out in the end, but I can think of one example where, investor waited, they didn't set up the IRA account right away, and they went to an auction and basically had been and got a property under contract. It was through a bank. The bank's like, great, we'll put you on. And then later they're like, okay, we need a new contract. And the bank said no, because we need the contract to list the IRA as the buyer. Same thing with all the closing documents. This particular buyer, she didn't set the IRA account. Yeah, we got it set up afterwards. But when she went back to the bank to get a new contract, they weren't very happy about changing it. And this can happen to anybody. Sometimes if you're asking for a new contract, the seller might get a little cold feet, wonder why we're changing the contract license. So it really helps to have the IRA set up ahead of time. That way, just from day one, you can have the IRA as a buyer. We all know the parties involved. The title company knows that we're going to be involved as well. So it just helps the whole process go much smoother if we have the IRA set up ahead of time. Doesn't mean funds are sitting there waiting to be, sent out, because real estate closing can take a little bit of time, but it really helps to have the IRA set up ahead of time.
That's so true. Yeah. Another common thing that I know you and I both have seen, Matt, is this issue of funding. Oftentimes we see people who say, okay, here's this property for $50,000, $100,000, and I want to begin renovating it right away in order to increase its value. But the problem is they only bring the purchase price over. Can you talk about some other expenses that people might need to consider and the type of cash we typically see our clients bring over in addition to their purchase price?
Yeah, if you know you're purchasing for a certain amount, it's always nice to think, are there going to be closing costs? Do we have prepaids? Are we prepaying taxes? Is there insurance prepaid? So just because we're closing on a certain dollar amount, we may actually need more money than that to close on the property. And then you allude to another part. If I know there's going to be immediate expenses, I'm probably going to want to send over money as well. It needs a certain rehab or something to be fixed. And then something else to think about is, it's nice to have some funds sitting there just in case. As a real estate investor, like I said, I know things come up, and it's nice to have those funds sitting there in cash that I can pay an expense pretty quickly. And I don't have to worry about transferring more money from a different IRA and see how that process goes to pay that expense. So it is very helpful to not only make sure you send enough over for the purchase, but maybe even a little extra to cover immediate expenses if that comes up.
That's so helpful, Matt. The last thing that we want to see happen is someone get across the finish line on closing and then have to turn around and realize, oh no, I still need more cash. So that really does help a lot of our investors to know that straight from the get-go. That's really good. So we have talked about buying property, whether it has a structure on it or whether it's just vacant land in an IRA within real estate, but maybe someone doesn't have the cash necessary to be able to purchase the entire property within their IRA. I mean, real estate is an expensive type of capital intensive asset. So Matt, what are some ways that we see people getting creative with their
Sure.
real estate investing? Can you talk about some of the strategies?
Yeah. Earlier we talked about probably the most basic option, which was just a cash purchase. And we still do see mostly cash purchases, but that can mean a lot of different things. And partnerships is one that happens a lot. That would involve the IRA being a part owner of the property. So a tenants in common purchase, that can be with outside investors, your personal funds, other IRA accounts, spouse's IRA accounts, the list goes on and on. It can be done. Your IRA can be a part owner of that property. So that's very common. We could even go into entities and LLCs. That could be a whole nother podcast all by itself. But these are different ways that you can get creative with purchasing real estate and having that IRA have the entire benefit or a partial benefit of owning that piece. And then if you just want exposure to real estate, but maybe you don't have a particular property, real estate syndications, lending, the list goes on and on for different ways you can get diversification in a self-directed IRA that maybe not doesn't look like I have 100% of the purchase price in my IRA account. So definitely plenty of options there.
For sure. The world is your oyster, really, when it comes to self-directed IRAs. And that's kind of the cool part about real estate is you can be creative with how you get exposure to it in your IRA. So thanks so much for that, Matt. So that's a lot of options for our investors who want to invest into real estate. But what I would like to do is kind of like jump us forward to past the finish line. Let's say we already get this property within the IRA. We have it, we have a tenant, we're ready to go, but it's in an IRA. I'm sure that there are some rules that these potential investors need to know about IRA rules, IRS specific rules when it comes to owning properties or really any investment within an IRA. Can you talk about maybe our top 3 or 4 that investors need to be aware?
Yeah. I'll definitely start with maybe the fun part at the beginning is income. So as you're holding this property, if it's generating income, so you're renting it out to a tenant, however it's generating income, that income has to come back to your retirement account at the proportion it owns. So I know we talked about partnering. If you're partnering, it's split between the partners, but your IRA is getting its due share of that income deposited back into the retirement account. You can't deposit it back into your personal account. So that is one rule. Same thing with sale proceeds. So when you sell that property, the closing agent, the title company, the attorney, they're going to send that money back to your retirement account as well. Maybe the not so fun part, expenses are treated very similarly. If a property is generating expense, whether it be maintenance taxes. The list can kind of go on, but the IRA has to pay that from the IRA account. So we need to be able to send out, an invoice. We'll send out the payment to the county for your taxes, the repairman, your contractor. But that comes from the IRA account for its due share. Quickly, I'll kind of just go over there. There are prohibited parties that are not allowed in a retirement account. They can't personally benefit from your IRA investment. So this would easily to think of would be lineal family members, parents, grandparents, children, grandchildren. They're not going to be able to rent that property. They're not going to be able to get a personal benefit, and you can't buy that property from them. So these are some things to keep in mind as you're managing that property or holding the retirement account. You can't rent it out to those people is the easier thing about it. If you have questions on it, definitely let us know. And then, big one for me, because I do a lot of, at least I did a lot of the repairs on myself. No sweat equity can be done for an investment held in your retirement account. So you can't be the one swinging the hammer. If you want to go do a great renovation project, you need to hire that out, and the IRA has to pay the costs for providing that, improvement to your property. So those are just touching on some of the things to keep in mind as this investment's being held in your retirement account.
That's really good, Matt. Those are definitely things that all of our investors need to be aware of. It's a little bit different than owning it personally, because you can, have a little bit more liberty because you're not dealing with tax advantage money when it's personally owned. So these are definitely rules to write down. We have plenty of resources, not only in our staff if you have questions, but also on our website about important rules regarding self-directed IRA investments. So I do want to point you guys to that. We will a little bit later too. One more thing that I do want to touch on before we end our time today, Matt, and anyone who has questions, please let us know, because we're very happy to. I've been able to address most of the questions in the chat, but we'll certainly discuss some other ones. And Stuart, I see that you have an excellent question about foreign real estate that we'll get to here in a second. I do want to talk about leveraging real estate investments in an IRA. Oftentimes, real estate is leveraged in the everyday world. That's what makes real estate really attractive to a lot of people.
Yeah.
Can you do that in an IRA? Can you leverage real estate in an IRA? And if so, how and what should we look out for?
Yeah, Tracy. I mean, a lot of people like real estate because you can leverage it. Leveraging is a powerful tool. It's kind of not unique to the asset class, but it's definitely a powerful tool people use to obtain more properties, buy properties they don't have the money for. You don't lose that benefit in a retirement account. It is still an option. It does have to be a non-recourse loan. So that means you're not personally guaranteeing the loan. They tend to be a deal-specific loan. So the lender is going to look at the deal, make sure maybe it cash flows or that they know that the payments are going to be made. They're not looking at your personal credit score. You are not personally guaranteeing that loan. So we do have a specialized list of lenders that some of them, there obviously are more. And either in some ways to get a little more creative on this could be even structured as a seller financing or somebody else's retirement account who's looking to lend. So there are ways to structure and use leverage within a retirement account. It just has to be non-recourse. It can be done a little bit different ways, but it does have to be non-recourse. One complexity this does add is there's the possibility of a UDFI or a UBIT tax that could come into play if you do use that leverage on a portion of what you're doing. So not in all cases, I can give you a much more detailed response if you have questions, probably on a one-on-one basis. But just something to keep in mind. It can still be used. And a lot of people don't know you can still use leverage in an IRA.
Great. Thanks, Matt. So as we start to wind down here, I want to really make sure that we touch on Stuart's question. And Stuart had an excellent question about foreign real estate in an IRA. And Matt, I know that you've worked with dozens of these, just even the short time that I've been sitting right next to you. So if you can talk about foreign real estate process, what we typically see our clients needing to get in order to get there. Oftentimes it's not directly in the IRA. Can you briefly describe that? And this might lead to some phone conversations, Stuart, if you have more questions. But Matt, take it away when it comes to foreign real estate.
Yeah, so I'll give you a a broad answer for now, and then obviously we can talk more on one-on-one. But what this typically looks like is it can be done. I guess to first answer your question, we have lots of clients that can purchase international real estate within a retirement account. It's going to involve an entity in between. So whether that's an LLC or a different entity in that country, we typically see LLC. So your retirement account is directly investing in an LLC. That LLC is then going to close on the property in the foreign jurisdiction. You want to check also with the jurisdiction to make sure if they have any special rules or so on, but a lot of them will accept US LLCs, broadly speaking. We will have that purchase price to the LLC purchase on the property. You still get that benefit on the US side. It's just we'll think of it as one extra step added to purchase that real estate internationally.
That's right. So just as we mentioned, single member LLCs in the past, in this presentation, this is where they become really essential and vital. So Stuart, if you're interested in doing foreign real estate, Matt and I, we've been working with some of these before. You can give us a call and we'll help walk you through that process. And we have representatives here at Midland who will be walking you through that process if you decide to move forward with us. Marcus has another great question. Marcus asks, similar to sweat equity, am I able to directly manage source tenants, or do I need the custodian or other third-party manager to do that? So I'm actually going to take this one, Matt.
Yeah.
Marcus, when it comes to sourcing your tenants, deciding who comes and lives in your property, that is something that you get to control. Midland's not going to vet or bring in tenants for you. That is something that you get to do for yourself. You have complete and total control in that process. Now, when it comes to any repairs that need to be made on the property, any changes, like say a water heater breaks, something to that effect, that's where your responsibilities end, and you need to utilize a third party, such as a subcontractor or some sort of type of repair service that your IRA will compensate for that work. So that's not something that you should be doing when it comes to repair work or improving the property, painting the property, anything like that. That's where the third party rolls in. But in terms of like managing your tenants or getting them into your property, you have full control of that as well. Mm-hmm. Heather, let me read your question real briefly, see if it makes sense for us to discuss it here. I do see it's about a non-recourse loan. It says, could you use a non-recourse loan when you bought land in an IRA and use the loan to build a house on it and then sell or rent out? So I'm assuming, Heather, your question has to do with, can we use a non-recourse loan to finance the construction of a property? Matt, do you kind of want to talk about the typical non-recourse loans, what we see people typically loaning on, the type of properties that non-recourse loans are typically lent out to, and how that can come into effect for a rental situation?
Sure. Heather, to answer your question, it is possible, but practically speaking, most of the lenders that we mentioned, like on that list, they like to lend to existing structures. So of the ones that we could provide you, I don't know if any of them are interested in construction loans. Not to say that doesn't exist, and if they will structure it as a non-recourse loan, then yes. You also have those other options we mentioned, private lenders and so on. But just to be, honest with you, I know the ones that we have listed on there, they do like to have existing structures before they'll lend to the retirement account, because there's no personal guarantee. The most they could do would be to take back that property, which they may or may not be interested in doing, to kind of answer you there. If you do have that, and just kind of, I guess, maybe go more into what that looks like, maybe this was, known or not assumed. You're going to have a mortgage payment with a non-recourse loan. The IRA is paying that. So if it's generating income, the IRA would pay that mortgage expense. So yeah, it can definitely be done. You'll have, a tenant in there that's hopefully helping to pay that expense that the IRA is due each time. I hope that answers the question. If not, Heather, reach out and I can go in more detail with you.
Yeah, thanks for that question, Heather. It was a great timed one. We're going to put our contact information up here shortly so that you can reach out to Matt or I directly. And I've put our company line on in the chat as well, so you can use that as well. But I do want to move forward, Matt. I do see that we have a couple more questions, which we will address. But for the sake of time, I want to make sure that we also talk about who we work for, Midland, and what it is that we add to this equation. So as we start to wind down things here, could you touch on why someone starting out in real estate investing in their IRA would want to work with Midland specifically? Yes, we're a self-directed IRA custodian, but what makes us Midland? What makes us ability to provide value for these investors? How does Midland basically make this process easy for these investors?
Yeah, as you mentioned, we are a custodian that does this, but what really sets us apart, even within that subsector, I'll start one of them, employee owned. I'll probably start with that. Every good chance if you talk to an employee here at Midland, they own a part of Midland. They're an owner of Midland, so they care. There's that little extra, pick up something at the end of the day because we own part of this. So that is nice. But really, the dedicated service rep is great. We have a team specifically for real estate. So I didn't invent the term, and I've heard a lot of people use it, but although it's a self-directed IRA, you're not in this by yourself. You'll have a service representative who's going to let you know the steps. They're going to talk to your title company. They're going to make sure all the documents are correct, and they're going to make sure your funds get from A to B for that closing. And while you hold in the property, you can call them, ask questions. Can I do this? Can I not? I need to pay this bill. Like, they can help with all of that, and they're a great team. Technology wise, we've put stuff in place to be able to electronically sign documents. So you're going to get a huge closing packet with, if anyone's closing real estate, you're going to sign your name a bunch of times. We're going to package all that for you to approve before we wire out funds. You can review it all electronically. You don't have to print off 100 pages. But that's across the board. Anything you'll do with Midland, we're going to try to utilize electronic signatures. The online payment portal is great. We talked about those expenses coming out of the IRA. We built a system where you can go on, tell us where you need to send funds, what it's for. We're going to do the record keeping, and we're going to send those funds out in a timely manner to get your expenses paid. And I thought this was a game changer, was the payment portal to bring in income. So your tenants can pay online. You can set up reoccurring. It just really helps make it a very easy process to do that passive management, as I call it, of your real estate within the retirement account.
Yeah, that's fantastic. And a couple other things that Midland does add to the table is we are invested in future education opportunities. This is an example of one of those things, just giving you guys some value. We didn't ask for anything apart from you guys just to spend a little time with us this afternoon to learn about real estate and IRA. But this is not the first time that we've done this. We have a whole archive of other similar information that we have available on our website. I'm going to show some examples. This is also on our website. We have a self-directed IRA guide that we put in the hands of all of our investors who are just trying to figure this thing out. We have one for real estate IRA specifically. Hopefully, the information you find from this live podcast today will also be seen in this as well. And also, we have a prohibited transactions guide. So if you have questions like, hey, can I do this specifically? I have a family member involved. Where's the line regarding this prohibited transaction rule? That's an excellent resource. But we do have a collection on our Midland University tab under resources on our website, a lot about real estate. And so I would really highly recommend that if you guys get the opportunity to take a look at our website, take a look at all that information that we do have. Now, before we end our time today, Matt, we have two more questions. And if there's anyone else that does have something that they need to ask, please go ahead and put it in here. But Said asked specifically, can we discuss mixing IRA funds with personal funds, say for buying an investment property? So let's say you have IRA funds that are not necessarily adequate to purchase the property in whole, or you just don't want to put all of your retirement funds into a property. How can my personal funds supplement that purchase? Matt, do you want to take that one?
Yeah, definitely. So I'll give a pretty basic situation, but obviously this can vary a lot. The percentages can change and the details can change. So feel free to reach out. But let's say if I was going to purchase a property 50% with my retirement account, and I had 50% in cash that I wanted to use personally. I'm going to purchase that property as a tenants in common purchase. I mean, two separate investors, even though it's my retirement account and my personal funds. They are considered two separate investors. The contract and anything related to buying that property is going to list those percentages. The deed is going to say that 50% is owned by my retirement account, 50% is owned by me. When I get income from those investments, then 50% of the income goes to my retirement account. I take 50% personally. And the same thing with expenses. So, $1,000 repair comes up, 500 comes from my retirement account, 500 from me. So you're just going to keep with those percentages, and that can be done for one partner, two partners, three partners. There's a lot more flexibility than what I just gave for an example, but that's kind of how that works when you're partnering with personal funds and your retirement dollars.
That's great. Thank you so much. Stacy asks, are income or gains from the real estate limited by IRA contribution limits? So there's two questions here, and I think I'm going to take this one, Matt. And anybody else that is needing to ask a question or need some further clarification, please put it in. Definitely want to fit these in. Stacy, IRA contributions are funds that we put into an IRA from non-IRA sources, so non-retirement sources. So think of like if you write a check to your IRA from your bank account. That's what's considered an IRA contribution, and there are limits to that. In the tax year 2023, you have the ability to put up to $7,500 if you're above the age of 50 into an IRA from like a checking account or a personal bank account, personal source of funds. These are non-retirement funds. Now, that is not a limit that is put on income into an IRA. Income in an IRA is a result of owning an asset or an investment that is cash flowing or as a result of capital gains. Those are not capped in an IRA, or at least not capped by IRA contribution limits. So if you have someone paying your IRA rent and all of a sudden, by month 3, we're already past, the $7,500 contribution limit, it has no effect. So there's no income limit based upon IRA contribution limits. All right. Thank you so much. Jonathan, you bring up a great question. Matt, I see that you addressed it in the chat. When we talk about personal ownership into real estate, when you put your personal funds and partner with your IRA to purchase the property, here's kind of like a very important distinction to make. While you are 50% owner of the property, you still may not utilize the property personally at all, just because your IRA is involved in the purchase of the property. This is going back to the prohibited transactions and prohibited persons guide that we were talking about. That's on our website. You can find that information there. But Matt, maybe we talk about this a little bit further. Why is it that even though I have personal money in this property that I can't use it personally? Can you maybe talk about that?
Yeah, so the rules come from, the IRS's rules on retirement accounts and what the prohibited transaction is going to play. Your IRA is still an owner of that property, so 50% benefit is still a personal benefit of that property. They've decided that they're giving you this tax advantage, this powerful tool for building wealth. If you had the personal benefit of owning the property too, there's different things seen as contributing or adding, but you're just getting a benefit from a retirement investment you wouldn't have otherwise. So that's why the prohibited party rules are in play. And as I kind of mentioned in the chat, even if it's 1%, 10%, those rules still apply. Until you didn't have any percent ownership of the property in your IRA, then you can use it personally. So.
That's Sorry about that. Thank you so much, Matt. Robert touched on a very powerful question, which Midland has a tool specifically for on our website. Can you talk about our payment portal and how we can get third-party work hired and paid through that payment portal?
Yeah, and I'll give you a couple of examples, Robert, but as Stephen kind of alluded to, if you use the payment portal, you just have to basically add up an invoice that you get from that person doing the work. The IRA will then pay 50% of that bill. You would personally send the other half of that payment. That's a perfect scenario if for some reason that isn't the case. A couple examples come to mind is certain counties require that the taxes be paid all at once. We've had clients send checks to us and then we mail them both together. If you have a third party who's not a prohibited party, they can pay that expense and then you can pay them. And actually, this is a good pitch for maybe using a management company because they could cover that, and then they normally will accept payments from both. So if it's just completely inflexible where they don't want a payment from you personally, payment from the IRA, there are options. But if they do, our payment portal can handle all that.
Great. That's one thing I really appreciate about the way that Midland services our clients. We try to make it as easy as possible to complete those aspects of managing real estate in your IRA. So the bill payment portal that Midland has set up has made it super easy for us to receive those invoices, just as Matt said, and get your third-party contractors paid. Okay. So Stacy, you do have an important question in talking about minimum holding periods, or can you flip properties? Now, this is going to be a little bit more of an advanced topic when we're talking about property flipping. And Matt, I know that you've been asked these questions several times, so I want to defer this to you. Can we give a bit of a kind of like a primer on active flipping of properties in an IRA and what that can mean for our IRA investors?
Yeah. So Stacey, there is no minimum holding period. So what you describe on the surface definitely can be done. You can flip a property in a retirement account. I would love to give you the cut and dry answer that Stephen's kind of alluding to it. Eventually, there may be a volume of flipping that's done in a retirement account that could generate that UDFI or UBIT tax. I'm not an attorney, so I can't tell you what it is. It generally tends to be like I'm operating a flipping business in a retirement account, not I'm doing a flip here and there in a retirement account. I don't have a black and white answer to give you because there isn't one. But to answer your question, no minimum holding period. If you either initially intended to flip the property, that can be done. Or if you purchase the property and it made sense to sell it, you can sell it. There's no minimum holding period. If we can get to a deeper discussion if we're talking about flipping multiple houses a year out of the retirement account. That's a deeper question.
Yeah, it's not so cut and dry. It really is dependent upon the circumstance and situation there, Stacy. But as a general guideline, everything that Matt said is absolutely consistent with what we've seen. So I would definitely take a look at that. But in the meantime, I just want to thank you guys so much for joining us here today. Some action items, if you guys are wanting to get started, is to open your Midland Self-Directed IRA at midlandtrust.com. Again, Matt mentioned about how if you don't get the IRA set up in time, that can create problems down the road once you do find that property. So making sure that the IRA is established beforehand, super critical part so that we can be involved in that contract process. Once your IRA is funded during the application process, we can then make your investment. You'll be working with a dedicated representative here in order to accomplish that. So simple 3 steps. But again, as promised, here's our contact information. We're so grateful that you guys took time out of your day. And for those of you who are watching this on the recorded version, thank you for taking the time to sit down and watch this, even though you couldn't meet us live. We hope to see you live next time. Keep a lookout on our page, midlandtrust.com. We're on social media, Facebook and Twitter. You can find us where you can get more information about upcoming events and webinars, also on LinkedIn. And if you have any questions about things that are mentioned today, Matt and I are more than happy to talk to you. That's our direct line. That's our direct emails. No one else answers that phone except Matt and I. So definitely give us reach out to us. We'd be happy to hear about your thoughts about this webinar and answering questions that you have. But in the meantime, thank you so much for joining us today. It's been a pleasure. And I hope that we were able to give you some good value. So thank you for your time and have a great rest of your day, guys. Thank you.